Alright guys, my name is Shervin, welcome to my channel. In this video, we're going to talk about the EQ Bank GIC and discuss why it might actually be a good investment. Now, a GIC or a Guaranteed Investment Certificate is a type of investment where you lock away a certain amount of money for a certain period of time, and in return you get a fixed amount of interest rate on a regular basis. Which essentially means that it is the most risk-averse type of investing, since you're guaranteed to get your principal back after the term is over, and you're also guaranteed to make a certain amount of interest on your investment. Now, as a general rule, the higher the risk that you take with your investment, the higher the reward is going to be, which also means that the lower the risk that you take, the lower the reward is going to be. Which is why GICs, despite being very safe investments, are usually not worth it because they offer little to no interest in return. But that said, EQ Bank have increased the interest rate on their GICs to the point where they actually may be worth considering. So if you watch to the end, you're going to find out exactly what they're offering and whether or not that's going to be a good investment option for you. And all that I ask for in return is that if you're new to the channel and you enjoyed this video, make sure to smash the subscribe button down below and join the community. I make new videos about personal finance and investing on a regular basis, and by subscribing to the channel, you get to see all the new videos right as they come out. Also, if you enjoyed the video and want to support me even more, go ahead and smash the like button down below for the YouTube algorithm. But alright, with all that said, let's take a closer look to what this GIC actually offers. Now, just to give you some perspective, before EQ Bank came out with their new offers, the best GIC available in Canada was the one offered by TD, which had a return of 10% over 3 years, which is the same as about 3% a year. But now if you take a closer look at the EQ Bank GIC and the interest rates that they're offering, you can just see how much better they are. Now, if you sign up for a 1-year term, you're going to get 4.15% interest on your money, which is much higher than what you're getting with the TD one. And of course, if you decide to commit for more than just 1 year, with each additional year, you're going to get a higher interest rate per year. To the point that if you sign up for a term that is at least 5 years or longer, you're going to get almost 5% return on your investment per year. Which again, for an investment where you're guaranteed to make that interest rate and not lose any of your principal, it's a very good deal. Now, the maximum duration that you can sign up for is 10 years, which essentially means that you can get either 49% return on investment over the 10 years, or if you decide to reinvest all the earnings, you can get up to 61% return on investment. Which, just to clarify, essentially means that instead of taking out all the interest coming in on a yearly basis, you just reinvest that same money into the same GIC and maximize the return. And just doing that simple thing where you reinvest all the earnings, you can earn up to 12% more over the 10-year period. So this looks like the perfect investment for everyone, right? Because you're guaranteed to keep your principal and you're guaranteed to make those interest rates. So should everyone just invest into this, or is there a catch? Well, in short, this is a great investment and it has very low risk and a very good return rate. But it doesn't mean it's the best investment available to everyone. For example, even though 4.9% is a very good rate, it's still nowhere near what you can get with an index fund. Now, if you invest into a broad index fund like the S&P 500, over the long term, you're going to make about 7% a year on average. Now, keep in mind that this doesn't mean that you're going to make 7% a year every single year, just like you would with a GIC. Instead, some years it might go up, some years it might go down. It really depends on what's going on with the market in that specific moment in time. But over the long term, and that means over 10 to 20 years, it is guaranteed to always go up, and it usually goes up about 7% a year on average. In fact, if you look through all recorded history, there is not a single 20-year period where the value of the S&P 500 went down, which is further testament to the fact that if you're investing for the long term, you can rest assured knowing that the market is always going to go up in value over the long term. So what does this mean for you? Does this mean that the GIC is not a good investment because you're not going to make as much as you would have with an S&P 500, for example? Or is there still some merit into investing into the GIC regardless of the fact that you're not going to make as much as you could have with other investments? Well, the answer to that question really depends on your investment strategy and how close you are to retirement. Because think of it this way, if you're investing for the long term, and let's say you're in your 20s or early 30s and you're not really close to retirement, then time is on your side. Which essentially means that you can take a lot more risks in the short term in order to make the maximum over the long term. So going back to the S&P 500 example, in any given year, the value of your investments into the S&P 500 could go up or down. There is no way to predict it. But if you, let's say, start investing from when you're in your late 20s or early 30s, and you just invest consistently for the next 20 to 30 years, you're guaranteed to make a higher return by investing into the S&P 500. Whereas if you're, let's say, in your 50s or 60s and you're retiring in the next 4 to 5 years, well, then there's no way of knowing whether or not the market is going up or down in the next 3 to 4 years. Which means that for you, as someone who's probably going to liquidate some of your assets in the next couple of years in order to fund your retirement, there's a lot more risk associated with investing into an index fund. Because you're really only investing for the short term and not really for the long term, because you don't have that much time until you retire. So what I would suggest is the following. If you're in your 20s or early 30s, don't worry about investing into safe investments like a GIC or a bond investment. Just make sure you're investing as much as possible into a broad index fund that is going to pay off over the long term. Now, if you're in your late 30s or maybe your 40s, then it's usually a good idea to have a mix of both safe investments and more daring investments. So if you're in this age group, it's not a bad idea to dedicate a portion of your portfolio to safer investments like a GIC, just to make sure you have some money coming in every single year. Now, once you get into your 50s and 60s and you're very close to retirement, then it's not as important to make sure you're maximizing the gains on every single dollar, but it's more important to make sure you're conserving your wealth and you get to keep all the money that you have. Which is why at that point, I would say it's probably best to have the majority of your wealth into safe investments like a bond or a GIC. So depending on which age group you fall into and how close you are to retirement, I would suggest you act accordingly. And if you are in an age group where you are looking for safe investments, then the EQ Bank GIC is by far the best that you can find as of this recording. So if you are interested, make sure to sign up while these high rates are being offered and make sure to sign up for as long as you possibly can. Now that's about it for this video. Hopefully you guys enjoyed that. Now, as always, if you have any questions about any of the stuff that we talked about in this video, make sure to let me know in the comments down below. I always respond to every single question that comes in. And with all that said, thank you guys so much for watching, and I will see you in the next video. Cheers.